송원근TV 책 속 한 장면. 오늘 또 브렛 크리스토퍼스의 포트폴리오 속의 우리들의 삶. 저는 포트폴리오에 맡긴 우리들의 삶이라고 번역을 했는데요. 자산관리 자본주의를 이제 설명하는 책이고, 크리스토퍼스가 직접 이 책을 쓰게 된 동기. 지난 시간에는 이제 첫 번째를 소개했다면, 오늘은 두 번째 자산관리 회사들이 어떻게 탄생했나. 특히 이제 영국에서 탄생하는 과정. 그리고 1990년대를 지나면서 2008년 금융위기를 또 지나면서 전 세계적으로 이런 자산관리 회사들이 어떻게 탄생했고, 그게 이제 기업 주식뿐만 아니고 사회 기반 시설 또 환경 관련 인프라를 투자 대상으로 확대하면서 그런 자산들을 어떻게 통제하는지에 대한 얘기가 나와 있습니다. 크리스토퍼스의 얘기로 직접 두 번째 목적을 들어보겠습니다.
The book. I think the second big thing that I try to do in the book, is to explain the emergence of the phenomenon, explain its growth, its development in time, but also in space, to try to explain some of the geographical variations of this. It's by no means, equally apparent in all different countries of the world. In some places, there's huge asset manager investment in infrastructure, the UK being a great example. In other parts of the world, there's almost no evidence of that. So explaining emergence, and I suppose, I think the way I would say that it's useful to think about this question is to think about what asset manager ownership of infrastructure and housing requires. And basically, it requires two things. So it requires money to invest. So asset managers can't buy and own infrastructure and housing unless investors give them money to invest in housing and infrastructure. That's the basics of the model. So they need money to invest, and they need things to invest in. So they can have all sorts of money at their disposal, but if there's nothing for them to invest it in terms of housing and infrastructure, then they can't carry out that investment. And so if you look at both those two things, you can begin to explain the emergence of the phenomenon. So I'll say a little bit about each of those two things. So if you go back to before the 1970s, asset management didn't really exist. Essentially, it existed, but it was tiny. Mariana said earlier that today asset managers globally have about $100 trillion, give or take a few trillion, under their management. If you go back to the 1970s, it was far less than 1 trillion. It was a much, much smaller phenomenon, partly because the types of entities that have subsequently given them so much money to invest, like pension funds, like sovereign wealth funds, were just much smaller than they are today, and partly because those investment entities carried out much more of their investment themselves. So the trustee of a pension fund would say, okay, I'm going to buy stock in Microsoft, I'm going to buy corporate bonds, rather than relying on external experts, asset managers, to carry out that investment on their behalf. And so what's happened since the 1970s is a twofold phenomenon. Much more surplus capital, surplus financial capital around the world in pension funds, in sovereign wealth funds available to be invested, and much more outsourcing of that investment to asset managers by those trustees of those capital pools. Back in the 1970s, to the extent that it existed, essentially all asset management investment was in financial assets, so not in real, quote unquote, real assets like housing and infrastructure. It was in financial equities and bonds. Beginning in the 1980s, asset managers began to diversify into real assets. First of all, they did that into commercial real estate. So they would buy shopping centres, they would buy office complexes, they would buy hotel chains. Hilton was a big investment for Blackstone in the late, in that period. And then only from the beginning of the 1990s, in different parts of the world, did asset managers begin to invest in the types of assets that I talk about in the book, so housing and infrastructure. And they did that partly because their clients, the pension funds and so on, began to tell them that was an asset class that they wanted to invest in. So it's kind of like a push and pull phenomenon. So on the one hand, asset managers said, look, have you thought about infrastructure and housing? On the other hand, their clients came to them and said, look, we want to allocate some of our money to these asset classes. And the one part of this story that I particularly want to emphasize, again, because it's important, is that this really took off after the global financial crisis. So there was a lot of money going into housing and infrastructure through asset managers before the financial crisis, but it really took off after the financial crisis. And a big part of the reason for that is that a lot of institutional investors who aim to generate reliable annual yields of, say, 4, 5, 6% for their clients relied traditionally on bond investment, fixed income securities, to secure those reliable annual yields. But of course, after the financial crisis, when interest rates went through like a decade of basically being at 0 or 1% around the world, fixed income securities were just not able to deliver those reliable annual yields. And so it was for that reason that asset managers and their institutional investors turned to housing and turned to infrastructure, precisely because they were able to deliver those reliable yields through rents that housing tenants pay and so on, that they had historically relied upon bonds to be able to generate. So big surge after the financial crisis. So that's the side of the thing about requiring capital to invest. So lots more investors have given asset managers money to invest in housing and infrastructure. The other side is requiring things to invest in. And again, it doesn't take that long if you go back in our collective memory. And I know in the UK this is kind of hard to imagine, but historically in many parts of the world, maybe even most parts of the world, most infrastructure for the delivery of essential utilities like water and electricity and things like that was owned by the state. And so if asset managers had come along in the 1970s in the UK and said, well, we want to be big owners of water and electricity and gas infrastructure in the UK, they couldn't have done it because it wasn't available to buy. And so it was only really with major privatization of infrastructures around the world and of stocks of public housing around the world, for example, in Germany is a great example of this, that suddenly there were much more things to invest in for asset managers who wanted to invest in housing and in infrastructure. And the only other part I'll say about that is that there's another really important part to the story to think about. So there we're talking about existing assets, but this is increasingly also a story about new assets. So if you think about probably the best example of this would be the infrastructures that the world urgently requires today in relation to climate, so infrastructures of both mitigation and adaptation. Well, if we were going through this 80 or 90, 70 or 80 years ago, the governments around the world might very well have said, well, we see that as our responsibility to finance that investment and to own those assets that eventuate and to earn the revenues generated by those assets. But we live in a very different political environment today, arguably also a very different financial environment, where governments around the world have essentially persuaded themselves that that is not the public sector's role. And so if the public sector, not least in a place like the UK, has persuaded itself that it isn't the government's responsibility to finance investment in renewable energy, for example, and that that's the private sector's responsibility, then again, that opens up a very significant opportunity for entities like asset managers. So that's the second objective.